Hello and welcome to Week in Markets. For the pleasure of being joined by our in-house investment analyst Joe Forward, who's going to talk us through the key events of the week, focusing on the market reaction, but also some of the developments on tariffs, on UK inflation, and also what we're hearing from corporates as they announce their latest results for the first quarter. So, Joe, I suppose turning to markets, to tariffs, markets continue to be hypersensitive to any developments on the tariff front. What would you pull out in terms of key events this week?
Yeah, so obviously it's been a key talking point that we've had for a couple of weeks now, and even, to be honest, from the start of the year. Yeah. The key one this week that I've had a look at, we've had China. So they've essentially stopped their airlines from importing parts from Boeing, who are a company in the US, and actually the largest exporter in the US as well. So this is obviously key to, it's one of the US's biggest companies. And obviously Boeing will not be happy with that. And, if I was a CEO, I'd probably be quite unhappy with my president who's inflicted some of this sort of trade war onto them. So, that's a key event that we've had, and it's likely that the president will have to certainly look into it or do something about it. On the opposite side, we've actually had some good negotiations. So the US and Japan have been speaking this week. Nothing conclusive yet, but those are likely to continue for the rest of the month, and hopefully we get some kind of good resolution there. And actually a bit closer to home, we've had negotiations ourselves with the US, so the UK have had them. And JD Vance actually this week came out and said that it's extremely likely that a trade deal will be made between the US and the UK. Now, it is in the US's interest to get these trade deals made. With these tariffs, we've got slightly lower growth expectations, higher inflation, and a higher cost of borrowing just following some of the government debt sell-offs last week. So they do need to be at the table and making these negotiations.
Yeah, so some key developments here, but it's interesting that Trump is rolling back on a number of measures, whether that be rolling back on smartphones, electronics, looking to make deals with key countries like Japan and the UK, but still that stalemate with China still very unsettling, and the markets are still, as I say, hypersensitive to that. But if we think about what markets have done this week, we've seen markets settle down a little bit. You look at world equities, they're around flat, but there is signs of strength in the likes of the UK. UK equities are up somewhere around 3%. Japan is also up. So those countries that are having greater progress with Trump actually seeing positive returns in their regional equity markets. Outside of that, you've seen positive returns from bond markets as well. So yields have settled down, and also gold continues to be a strong performer. So I suppose encouraging that the market's just digesting the tariff news, being less dramatic or volatile, should I say, which is all positive. If we turn, perhaps just thinking about this week, we continue to get a reading on the health of the US economy. We get real hard data, and we get survey data, so softer measures, both surveys of consumers, but also businesses. Is there any developments there that's signalling that tariffs are starting to feed through into either real data or softer measures?
So I guess year to date, we had seen some softness coming through in the US data in terms of growth. Yeah. But in terms of the hard data, we're kind of yet to see it. So this week we had the retail sales come out, and they're actually higher than expected. So not yet feeding through into those retail sales. One thing I would say when looking deeper into it, a lot of it was driven by autos. So whether consumers or businesses are starting to just actually start buying those autos before you get those price increases from tariffs, that could maybe be just inflating that number somewhat, but still not showing through yet. If we move to the UK, we actually had some good inflation data, so that was 2.6%, lower than expected. If you couple this with some of the payroll data we had, so payrolls were actually down slightly. Also with wage growth a little bit softer than where it has been. This means there's actually a bit more scope for the Bank of England to cut. So going from the start of the month, there are around 2 cuts expected in the UK. After the data in the last week, that's more like 3.
Yeah, so quite a bit to unpack there, but I think if we just think about the US data, it's interesting that you've just got this contrast between actual spending patterns actually remaining quite firm, perhaps a bit of front running on the tariffs. But then we look at sentiment survey data, consumers are certainly downbeat, businesses are downbeat, talking about higher prices, weaker activity ahead. But so far that's not coming through in what actually matters, which is the hard data. So certainly this will unfold over the coming months depending on how tariffs will be implemented. And you're right, Joe, just to focus on the UK, the good news is that the inflation front is a bit better. We've had oil prices fall more than, say, 20% so far this year, which will be key for the UK inflation basket, given UK imports a lot of energy. And we've had a stronger pound as well, which is supportive. So expectations are that the Bank of England can cut interest rates, fully priced for May, so a 0.25% cut to interest rates. The market's expecting. But then at every consecutive meeting, there will be an additional cut. So a little bit more comfort for UK on inflation and the path of interest rates. If we just turn to corporates, we're currently going through a phase where companies, particularly in the US, but also around the world, reporting their first quarter financial results. Joe, are there any standouts right now in terms of what's being reported, but also what companies are saying?
So I just picked out a couple of tech names. So the first one is ASML. Now they provide a lot of the equipment that is used to manufacture chips, which are obviously a big part of the AI theme we've seen in markets for the last couple of years. Now ASML actually missed their order expectations, so it actually came in at €1 billion less than what was expected in terms of orders. And they've essentially come out and said the tariff uncertainty is causing a great deal of that. So again, that's proven a bit of a problem for that kind of company. And you saw a lot of the tech names maybe struggle. I think they released on Wednesday. You saw a lot of tech names price-wise started to struggle on that day. But on the flip side, you had TSMC, who are the world's largest chip manufacturer. So they released their earnings as well this week. And they actually beat on both revenue and profits, and actually kept some of the guidance for the rest of the year the same. So not expecting any dent to the AI theme and still remain confident within that.
Thanks. I think it'll be interesting to, as we progress through earnings season, to really understand, what companies are using tariffs as an excuse for slightly weaker results and weaker forecasts. So that will come out in the wash over time. But thank you, Joe. Thanks for the update, and thank you all for watching. Have a great Easter, and we'll see you next week.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value, and you may get back less than you invest.